Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the Tuesday strategy session. We're talking gold, we're talking oil, we're talking Forex. We've got a lot of big movers and shakers out there right now. It's been a fascinating session. We see the Dow Jones Industrial Average up about 322 points. We've got the volatility index. The VIX is up about 2%, which really is nothing for the VIX. Still reading right around 16, so that tells us that there is a lot of positive sentiment in the markets. And our market drivers that we talked about yesterday are still very much in play. We had a pretty good reading out of the CB, Consumer Confidence Index, earlier today. I'm going to go ahead and go over that. We're going to recap that stuff. But big picture, right now, what everybody's thinking and talking about is the government shutdown. I predicted earlier that this week we were going to get a deal done and reopen the government. I don't know now. The rhetoric from both sides is really intense. I don't think there's any negotiations really at all. And now it just looks like you're in a logjam situation. And what we're going to see, if this government shutdown does continue, we are going to see something that's unprecedented. You're going to see that the food service, or not the food service, but the food assistance, the SNAP benefits are going to expire on the 1st of November, and that's going to put 42 million Americans at jeopardy of potentially not being able to stock the pantry. There's going to be a lot going on here. And when we talk about civil unrest and uncertainty and all the different things that can move markets that are outside of our control, that's a big one. And this is something that as the days pass and as sort of 0 hour draws near, you're going to see more and more angst creep into these markets because we don't know what's going to happen after those benefits expire. 42 million folks are supposedly on those rolls that receive those benefits, at least partially helping them I don't know what you'd say, I guess, survive. If you do see those benefits eliminated to 42 million people, you're going to see some unrest. And that's some of the things that we're looking at in the market right now. You're probably not going to hear that anywhere else. I'm not reading it on CNBC. A lot of folks don't believe it's going to be that big of a deal. That's a big deal. And it's a potential game changer. We talked logistics yesterday with the air traffic controllers and also a lot of the folks that are at the TSA not being paid for several weeks in a row now. Now we're talking shortages. The logistics of the air travel are going to become an issue. We are starting to see, just all this stuff aside, you're starting to see the infrastructure break down. And when you start to see that, then you start wondering about debt ratings for the United States. You start wondering about supply chain issues. You start wondering about civil unrest. It's all a very big deal. It is all a very, very big deal. And, cooler heads need to prevail, and a deal needs to get done this week. There's still time. There's still 3 or 4 days. But if you don't get that deal and they don't reopen the government, you're probably in line for some serious fireworks, at least in the short term. So I'm skeptical about a lot of the rallies that we're seeing here today, but it is significant. And I want to point out that sentiment is bullish, even though there's these market drivers on the horizon. If you shut down the government for a couple more weeks and you see the civil unrest and some of the things that we see developing, some of the things we believe are going to develop, you're at least going to lose some of your credit rating. The United States will. That's almost a foregone conclusion. So there's a lot going on here, guys. There's a lot going on. So I want to welcome everybody back. I had to start with that because that is really becoming more and more important. We're going to cover that. We're going to cover the chart index. We've got some trade ideas that we've got coming into play. We had a absolute dandy on gold. We got a fresh level on gold that we need to target, and I think it may actually come into play. The trade of the year may have developed in silver. We're going to talk silver as well. WTI crude oil starting to show some of that negative bearish action that we talked about maybe being there. I think that's a pretty big one as well. So we're going to have all these things and more. Any markets that you want to look at, any questions you have, I'm more than happy to give you my opinion, or at least if it's an opinion question, I'll tell you exactly what I think. If it's fact-based, then I will get you an answer if I have one. If I don't, we might have to go to ChatGPT again, right? Don't rely on ChatGPT. That thing makes a lot of mistakes. Do your own thinking, at least going in. It's a powerful tool, but it makes a lot of mistakes, believe me. Let's see. Yes, sir. Good to see you. Yes, sir. Welcome over in YouTube land. T Marina. Hi, T. How are you? I'm confident you're doing well. Let me see. Chuck can't hear me. You can't hear me? I think I don't know. It looks to me like I'm going. Maybe turn up the volume a little bit. Tina, how good to see you. Tina, welcome over on X. Can you please have a look at the dollar CAD? I placed a long trade, but it went south on the hourly chart. Absolutely, Tina. We can certainly look at the dollar CAD. Andrew Gorwell, good to see you. Ralph H., a pleasure. Tuku, good to see you. Yeah, I think my sound's up, rocking and rolling. I see it right there. On my audio input capture, so my levels look good. I don't know. I might just be on your end, Chuck. You maybe just got to tune it up, or maybe just rebuffer the stream, or just exit and then re-enter. That works sometimes. Let me see. T Marina, you're so right about ChatGPT. Lots of errors. I'm not kidding you. Amazing tool. It's amazing. It's a long ways off, in my opinion. I've just done some quick searches on numbers. I said, hey, write me something about inflation numbers. And the inflation numbers last week are completely wrong. They're completely wrong. So remember that it's a tool. Always do your own thinking. AI trades, I sort of feel the same way about trading robots and EAs and things. Do your own thinking. Understand exactly what something's supposed to do before you employ it, and definitely before you put your own money behind what it thinks. That's just my opinion. All right, guys, Switch Markets community, you want to trade any of the ideas we talk about here today, go ahead and do so. There's a lot. The service suite is really taking off over there. A lot of free new tools, a lot of things that you can use to really get up and running with your trading relatively quickly. Thousands of markets, anything you need, they've got it. All right, trade update. Here we go. Government shutdown rolls on. Great Britain, Australian dollar in play. Let's go ahead and start here. Interesting type of a scenario here. We're really seeing this month turn incredibly negative for the pound Aussie, and this is sort of our level down there, 62% zone. I love the back end of this golden zone. I think this could be an absolute fantastic trade, and we're sort of coming into range. So keep a close eye on that 2,000 area, that 62% zone. That's a long-term monthly zone right from that spike low back on October 2024 to the tariff panic of 2025. This level right here is coming into play. I really like that one a lot. So go ahead and keep a close eye on that support zone. Remember, typically we're looking to bid support and sell resistance. This area should at least draw some short-term bidders, and I think it's going to be a fairly good area to target. So I'm watching that one closely. Let's see. We had a great trade idea that came across the board in gold. A huge metal sell-off highlight Tuesday's session. This was from last Tuesday. This was about a week ago in the gold market, and we had a nice buy that's set up right from our 38% retracement zone on this weekly chart, and it was a dandy. It came right down. Let's go down to the shorter time frames. We monitored this one. Our profit target, our next level was up there at about 4,011. Really a beautiful bounce. We went right down here. We hit our Fibonacci just perfect. We went right up to about 4,019. That was a great trade for about $35, something like that, 3,500 pips. Fantastic. The accuracy of these levels, even this many years of doing this, really blows me away. When you get a clean shot at a Fibonacci and there's enough action in the market, it is really a high probability trade setup. The only issue is, can you stay patient to get enough of these setups, or is there enough market volatility to get a lot of these setups in a given period of time, a month, a day, a week, or a year? For me, I look at it this way. There's 200 trading days a year roughly. And there's more than that, believe me. There's more than 200 trading days. But I say that if you could be dialed in and focused even 180 trading days a year, that gives you time for vacations. That gives you time to rest, to have sick days, all of it. Let's say you can make 100 trades a year. Let's say you can make 90 trades. Let's say you make 75 trades a year. 75 trades a year. If that's the case, you're going to be sitting and watching the markets at almost, a 3-to-1 clip? A 3-to-1 clip over actually executing trades. So for every 3 days that goes by, maybe you're making one trade, right? That's hard. That's hard. But if you look at a body of work, let's say you just made 75 trades a year. That's it. But you were hitting high probability setups. Now, this is where a majority of the traders break down in their mindset. That's why a lot of folks gravitate back towards 1 minute and 5 minute charts, because they always want to be trading. Okay, we're going to use the law of large numbers. We're going to have really a small edge and apply it over and over and over again. I'm sort of on the other side of that. I mean, I like day trading. I do it. I also tick scalp. You guys have seen the videos out there. But when some of these trades come along, and we were stalking a pullback in gold for a long time, but when one of those develops, there's a big difference in your probability of success on one of those sweet levels. I call them sweet levels, kill zones, whatever. I mean, when those come into play, you have an incredible chance to succeed. And that's one of those where you're not looking to win 51% of the time or 52. You're looking to bank 80% of those. That's the reality of it. So if you do the quick math on 75 trades a year, 80% winners, 70% winners? A lot of folks don't believe it can be done. I can tell you that when trades like this come into play with those weekly levels or maybe monthly levels, when those do develop, your odds of getting at least a little bit of a bounce from support or a little bit of a pullback from resistance, at least in the short term, are extremely high. Now, how you manage your trade is what's going to make a difference if you win or lose, because there are going to be some that just sweep through the numbers and you lose. That's just part of life. But it's being able to cut those off and maybe make sure that you hit your targets on some of these other ones that really separate the winners from the losers. It really is all about trade money management. If you don't do anything else, master your money management and your risk management. Master it. Honestly, be an expert. Be a black belt in risk management. Understand exactly where you're going to put your money, where you're going to take it out, where you're going to cut off a loser. If you can do those things, the strategy, it does matter, but it's not necessarily the most important thing. To me, I look at a weekly level like that, and it is much, much different than trading a 5-minute chart or a 30-minute chart. That's sort of my spiel on psychology. Remember, not every trade's a 5-star trade. Not every trade is a high probability setup. A lot of them are pretty good setups, but they're not real great. You know what I mean? And after a while of taking these trades, you can feel when you're taking sort of a marginal setup or a marginal trade. That one right there on the gold chart was very good. So we want to, sort of, if it ain't broke, don't fix it type of not a motif, but a mentality here. How deep does the gold pullback go? Well, it's interesting because we don't really know. We're seeing some definitely bearish pressure that nobody was expecting. I wasn't expecting a big second losing week in a row, and that's exactly what we're getting. Why? The dollar's not really strengthening at all. And there's actually reason for this gold market to go up. What's happening right now? What is happening? This is how markets work. They ebb and they flow. They ebb and they flow, and they knock out folks that probably didn't have enough money to buy up here at 4,100 or 4,200 waiting for that run to 5,000. I still believe we're going to 5,000. I really don't see any way around it. The question is how do we get there? Could we go down, way down here this week? If we do, we're going to be waiting. So we got a trade idea out today. Up next, a fresh support level in gold. Like I said, if it ain't broke, don't fix it. And I have no problem buying into this market really in every opportunity I get. I'm going to forego the 50% level because I'm not a 50% trader. That's just sort of the hard breaks that I've learned over the years. This area right down here, though, I really love this 13-period EMA. And you've got it right there, 13-week EMA down at 37.87. And if you notice, we've got a fresh entry point or a fresh key level and a next level. This is a pretty strong trade. I think that if you do get an opportunity to sell this market down between the 50 and the 62% in that Fibonacci golden zone, and we get to really touch up that moving average, that's going to be an extremely strong entry to the top side. So that's what we're going to look to do. We're going to look to be aggressive there. Is that trade as good as the 38%? In my opinion, it's very close. Very close. The only thing that would make this trade take it to the next level would be as if we had that moving average right on the 62% line. Then I would say you go and you go and you go hard. So there you go. So that's what I'm looking at for gold. We got a fresh trade idea out there. I think it's going to be a pretty good one too. I'm excited about the gold markets. If you remember, we sat here all summer long. All summer long. And it was like we were counting the days to Labor Day. And then since Labor Day, this has been just a beautiful market to trade. A lot of trend plays, a lot of pullback plays. Even if you're selling tops in this gold market, there was a reason to sell that top. Your high right up there was 43.79. You could have easily sold right up here at this all-time high and got the pullback. You could have even played a washout beneath last week's low. There's people making money selling gold now. We haven't seen that in a long, long time. This was just a killing field. Anybody that was short was eliminated. It's not the case now. A lot different. Let me see. Stanley, I'm hearing you clearly over here. That's great. That's great. Fantastic stuff. Let me see. Ahmad, just joining us. Nice to be in your live session. Absolutely, Ahmad. Welcome. We're going to go to that dollar CAD here in just a second, Tina. That's for sure. T. Marina had to make it add a disclaimer to its role. Yeah, no kidding, right? ChatGPT should. Well, yeah, it does have a disclaimer, actually. Let me see. You have chilled out now after all these years. I don't know, Tina. I still get pretty worked up sometimes about the markets, but it boils down to just making good decisions. And if you can wait for those setups that are really great, then you got a great chance to be successful. And then the profitability, though, that's when you get into the other end of the pool where you have to have enough on each trade to really make it worth your while. Can you wait 3 days to make $25 or $30 on a trade? And the answer is no, you can't. When you're waiting, making 2 trades a week, maybe 1 trade a week, 2 trades a week, you need to be getting paid when those things come across the board. And that's very, very important. And that's where you probably need more money to trade in this fashion. But it still doesn't mean that you can't have a great intraday strategy, make money every day, a little bit of money every day, and then look at these longer term trades with a little more affinity saying, oh boy, we got a really good one coming our way. That's for sure. All right, let's go ahead and let's cover silver, and then we'll get to that dollar CAD, and then I do want to dive in to some crude oil. This was sort of the trade that we outlined. I've been all over X with this trade. big picture, it's the same essential structure as you had on gold is this silver market. Nice big rally, sort of a pullback, second losing week in a row. So we're starting to really show a correlation. And there always is sort of a correlation between silver and gold. Very strong right now. Very strong. Metals are sort of going and they're coming back and then they're going to go probably at all-time highs here. I can't tell you when. I don't know when, but I think that you're probably going to grind up and test those highs in November. I would be very shocked if you don't make more all-time highs by Thanksgiving, but that's a long time from now. What can we do right now? I was really watching the silver market. You can see we bounced right off that 50% retracement at 45.70. That was a situation where I was like, I don't like 50%, but I do like that moving average, and that 13-week moving average is right around 44.73. And the key level there is 45. So I'm looking at 45s, that zone right around 45. Very nice. Now, we may not get a chance at it. That may be as deep as the pullback gets. You'd love to see this silver sell off maybe tomorrow going into the FOMC announcements, maybe Thursday, maybe coming after the FOMC announcements. Then you'd have an opportunity maybe to bid that. I think that's a great trade. I really do. You probably see some compression between 45 and 43. That could be beautiful. That could be the position you take, for the next 18 months. We just have to wait and see if we get it. That's for sure. That's absolutely for sure. I don't remember if I said, hey, Dave F19. I think I already said, hey, but maybe I might have forgot. A lot going on here. Let me see, Tina. 8,000 is the equivalent of a $100,000 prop fund account, I heard. 8,000 pounds? Yeah, I mean, yeah, $100,000 prop fund account. So what do they give you to risk? 10% or about 8%. So that sounds about right, Tina. I think most risk drawdowns, maximum drawdowns are 8% on a funded account, something like that, maybe 10. So that would be your 8,000 pounds. So yeah. So basically you can have 100,000 and the 100,000 lets you take large positions, but you've only really got 8,000 liquidity to work with. So you definitely want to be ready there. Let me see. T Marina, Shane. Shane, can you do a future strategy session on impulse movements and the pin bar? It's not a bad idea. The pin bar. I haven't heard that one in a while. Impulse movements and pin bar. Let me look into that, T, and see if we can build something. That's interesting. That just rang a chime somewhere back up in there. Let me see. Shahil and Lucy Patel, good to see you guys. Glad to be back catching a live stream. Hey, Shane, so I saw gold hit the 200 EMA today on the 4-hour time frame. What is happening like you just asked? Well, I mean, the bottom line is the 200 EMA, that's an interesting time frame. So if you were going to go to just add it, let's go up here to indicators. There's nothing wrong with a 200 period EMA, nothing at all. Most of the time when you use those longer time frames, folks lean towards a simple moving average just because the time frames are so long. Whereas what I'm saying is you're looking for broader trends. You don't necessarily need to be sensitive to the most recent price action, which is what an EMA does. But you're simple. There's absolutely nothing wrong with that. So we go right here, moving average exponential. Let's go ahead and take a look at that. And then what do you got here? 200. 200, and let's go ahead and pick a different picture here. Let's go ahead and just roll that. Okay, so there's your 200 period. So you're going to go 4-hour time frame. There it is. Interesting, Shahil and Lucy. What you see in here is a nice big dump, and now you're reestablished. A lot of folks would believe that that's exhaustion. There's your 200, right? Tested the waters beneath it, and now you bounce right back above it. Plus, it looks like you're rallying back up above that 38% retracement. Interesting stuff right here in the gold market. Probably going to rock and roll higher from here. That's what I would say. I can tell you that just judging by your trade setup here in your technicals, that right there is going to be a likely stop out point for a lot of people. So this looks to me like retail longs are piling back into the market, and that's great. If you're holding longs, we expected this sort of up here a little bit higher, but look at we had a great hit, that washout right there, right down there, and now you're going to retrace. Could really turn out to be bullish. I would be shocked if we don't end up bullish this week in gold, even though we've seen some major selling thus far. That's for sure. Let me see, Tina, to get the same leverage with an $8,000 account from 100K, well, the leverage probably is going to be a little bit different because the $100,000 account theoretically is going to be able to service the maintenance margin or the initial margin that you're going to need to open big positions. So the idea that if you showed up with 8, like let's just use a crude oil futures contract example. So if I was going to go here and I was going to trade WTI crude futures, and I was going to say, okay, what exactly do we want to get accomplished with my trading? And if I had 8,000 pounds, which roughly, let's just say it's about, $10,000, $11,000, I know that my intraday margins are going to be about $1,000 per contract. So I could probably only trade 6 or 7 contracts and still leave myself a little bit of room just in case the position went against me. But if I have 100,000, I could probably step up and trade 10s and 20s. And even though my per pip value would be much, much greater, I would have $8,000 I would have my full allocation of risk capital to manage my open positions. So instead of managing, like let's say you're 8,000 pounds and I've got 1,000 pounds per contract as my leverage, my initial margin. All right, I'm only going to be able to take like a position of 5, say. 5, that's going to take 5,000 pounds of my 8,000, and then I'm only going to have 3,000 left to manage the open position of my 5 contract position. But if I have $100,000 to work with, then I'm putting on 10s and 20s, and now I have that whole 8,000 to service my positions, which are much, much larger and much, much more valuable. So the idea here is that the volatility when you get over leveraged will still kill you deader than a hammer. But that $100,000 account is going to give you the ability to take larger positions, with the idea probably that you're going to scalp some ticks, meaning you're not going to be position trading. You're probably going to be tick scalping. That's pretty much the reason why I would lean towards the $100,000 account, just because you have greater purchasing power. So the leverage is always going to be the same. The margin requirements are going to be the same, no matter if you're trading futures or CFDs or Forex. Those are all going to be outlined by your broker, right? Your margin requirements. But if you have $100,000 to work with, that's a lot better than 8, because I can take bigger positions. I mean, if I have 20 contracts down and I get like a 10-point bump, I'm in great shape. And a lot of what I do is tick scalping, so that really is advantageous there. Interesting point, though, Tina. Good observation there with the way that leverage works and really capital. Just to tell you the truth, the more money you have, the better, especially when you're trading. It's just a larger margin for error. You can really stay in positions. Sometimes that works, sometimes that doesn't. But if you have more capital and you have more purchasing power, you really have a greater chance to win. And a lot of people don't believe that, but I do. I can tell you that if you have deeper pockets, you can weather storms and you can figure out ways to play multiple markets at the same time. More money is almost always the right answer. Well, I mean, it is. It just is the right answer. All right, dollar CAD here. Let's go ahead and take a look at this one. I would just go ahead and start out on our monthly chart. We had some interesting stuff happening here. This was our 38% monthly. Pretty darn good trade. We did rally up a bit higher, though, 140.80. But we really, looks to me like we caught the top of this thing. Now, the Canadian dollar has made a comeback against the USD, and a lot of that had to do with crude oil prices jumping to the top side. Right now, we're trading right around 60, which in my opinion is about $4 too heavy for this time of year, $4 to $5 too heavy. But it doesn't matter what I think. It matters what the market's doing. So crude oil definitely is a major driver of the dollar CAD. So if you're trading your dollar CAD and you're scalping it on 1-hour charts, probably need to be at least conscious of what's going on in WTI crude oil. Very, very important there. Now, as far as what our key level was, 140-ish, I said that's a fantastic resistance zone. It panned out to be pretty good. I believe we got knocked out of that trade, though, early. Could have had a secondary entry, but we're not going to worry about that for now. Let's go right down to your 1-hour chart and have a look and see, okay, I got a 1-hour chart going, and you can see that if you were long, it depends on when you were long, but you can see the last 3 hours have been just really ridiculous. Really a tough period. I mean, that's an according to oil downtrend, and it started right back around that traditional NYMEX open for WTI crude oil. So if you have WTI crude that typically starts, the volume flows into that market right around 9 a.m. Eastern, then you probably need to be aware of that if you're trading the CAD, that you're going to see a little bit more action enter the market there. So let's go ahead and I'm going to go ahead and try something here. You see right there, okay, about 7 a.m. East, 7 a.m. my time, 9 a.m. Eastern. And let's just go right down to, let's pull a WTI crude oil chart, 1-hour chart. So this area right here, you can see that it actually, you'd be looking for potentially a rally in this market to maybe correlate with the sell-off that we're experiencing here in the dollar CAD, something like this. Didn't happen that way. Didn't happen that way. So as far as if you're still taking a draw here to the top side, it really isn't a bad play to be long. It's just, man, you just got caught in a really tough environment where if you're buying somewhere up in here, it's just the volume came in. It looks like it came in against the U.S. dollar and certainly sold off. So what I would be looking to do is probably defer to another strategy. We can already see that this is almost a trend day down, very close to it, very bearish, still an L formation on your 1-hour chart, but there may be reasons to buy. Right here, you can see we are in oversold territory on your RSI. That suggests that maybe we're going to get a rally here. Let's go ahead and defer. We're going to get back to this Euro CAD, very choppy here in a second. But this dollar CAD, let's go ahead and see what's developing here on a daily. That's not necessarily good news. You're almost developing a cross under, which would be a sell signal. But let's take this right down to a 30-minute chart and see what could happen from here. All right, there was your sell that developed back right around 7:30, cross under. What do we have on our RSI? RSI on the 30-minute, we're deep into oversold territory, so we're looking for a buy. Still very, very wide, though. This really is indicative of an intraday trend. Very difficult to you can't. This is why they have risk management. Sometimes you're going to end up the wrong way on trades. At this juncture, we're not really seeing much reason why we would get a rebound other than maybe the price just moves up. Now, the big thing you got to watch here with this Canadian dollar and the U.S. dollar trading probably the next 18 hours or so is tomorrow's a huge news day. You're going to have the Bank of Canada and the Fed interest rate announcements all in one day. That's going to send this pair absolutely crazy. So is this a high-risk time to be trading the dollar CAD? Probably, but we are expecting volatility. So if you have good risk management, you shouldn't have to worry about much. You just cut this trade off when it gets to be too expensive. In my view, though, it's a direct reflection of what's happening in your commodities markets. WTI crude oil being up around 60, even though you're off about 2% today, you're still around 60. That's kind of bullish for the Canadian dollar. Tomorrow's a huge day, though. The Fed announcements, the Bank of Canada announcements are going to dictate what exactly happens with our dollar CAD for sure. It's going to be crazy volatility. Not to mention, you've got an EIA crude oil inventories report that's going to occur tomorrow as well. And later today, you've got an API crude oil supply. A lot going on. A lot going on right now, especially with crude oil, Canadian dollar, the loonie. I mean, those are typically married at the hip, joined at the hip. Those two move. We're going to see exactly what happens, but this is a high-risk time to be trading the dollar CAD. Nothing wrong with it. If you're already in, you've got your trade outlined, you've got your risk allocation, your stop loss, your profit target, and your entry. You just roll with it and let it play out the way it's supposed to. Challenging scenario they'll face in this pair for today. That's for sure. Let me see, Tina. 140 is the entry, but not triggered. Yeah, 140 even. Let's see, 140.09. Okay. Yeah, I mean, if it's on the board for a buy, there would be no problem buying up here. I'd rather buy up here just to see, make sure all this pressure's over, because the intraday pressure is definitely down. Definitely down. That's for sure. All right, guys, let's go ahead and get on with a few other things here. Week 44 is a big one. Today we had CB consumer confidence. That's going to be our fundamental of the day. And then also the BOC and Fed interest rate announcements. That's going to really dictate policy for what we're looking at in that dollar CAD, but also what we're looking at for North America's budding trade war between Canada and the United States. That's going to impact the import-export flow, the trade balance, all of it. Those two interest rate decisions are big. We're expecting the BOC and the Fed to both cut interest rates tomorrow. That should be interesting, but it's going to be all about tone. Earlier today, Trump was, might have been during the overnight because Trump's in Asia right now, was making comments about Powell being gone very soon. It looks like I'm going to be wrong. It looks like Powell's going to play it out till the end of the year. I still say that he quits, but not yet. He's not going to quit yet. I think he's going to serve his term out, and he's not going to serve it until May, I don't believe. But I think that Jay Powell's going to finish 2025 as the Fed chief. Absolutely fascinating stuff. You're welcome, Tina. Okay, so you got the BOC and Fed interest rate announcements tomorrow, Thursday, BOJ, ECB interest rate announcements. That's big. We're going to have FOMC live for you tomorrow. That's going to be about 10 minutes before Jay Powell's presser at 2:30 p.m. Eastern. So I'm going to be on at 2:20 p.m. Eastern time. Be sure to tune in. I'll give you some key levels. I'll give you all of my analysis and my opinion on what Jay says. He's got a lot to cover because they're going to ask about the government shutdown. They're going to ask about the EBT, the food stamp portion of that SNAP program that are going to expire. Those benefits are going to expire. They're going to ask him about a lot. Supply chain, remember supply chain inflation, supply side inflation? They're going to talk about that. So there's going to be a lot going on here. I can't wait. I think Jay Powell's going to have a great time trying to explain a lot of the present situation. I don't think he's going to have much to say. I think it's going to be a very, very brief, and I see it being 30 minutes. But our markets are going to react big time. So looking at that. For today, though, CB, consumer confidence, this is the chart board, consumer confidence index. It measures the level of consumer confidence and economic activity. That's it. That's all you need to know. It's a leading indicator, predicts consumer spending. Spending drives consumption, yeah. Spending is consumption. That drives economic growth. That drives GDP output, things of that nature. It is a leading indicator of either an economic expansion or a contraction. High levels are going to be what? A higher than expected reading is bullish for the USD. Lower than expected is negative or bearish. So the big question is what's high and what's low? Nobody really knows. We're going to look at a historical chart here in just a second, but you can see CB, consumer confidence, came in at 94.6. That was more than expected, but down from the previous release, right? So what is it? It's a sandwich number. You crumple it up. Sandwich doesn't mean anything. You crumple it up, you throw it away. It does not mean anything. Today, is it being seen as bullish or bearish? Markets are up. They're not up because of this, but this is sort of an interesting look into what we think may happen here in the next 3 to 6 to 9 months. It's a pretty strong figure. It really is a pretty strong figure. It's not bad at all. A lot of folks would disagree with me, but I'd reference the long-term chart. You can see this is the conference board. It's like a think tank, something of that nature. You got S&P Global. You got all these different firms that put out statistics and numbers. They're just trying to predict things ahead of time, and that's really how they make their money, is selling information and data. The conference board, if they're your favorite, okay. Bottom line is this. This is just a number. It's just a statistic. That's it. Don't get too caught up in statistics. A lot of times they lie. U.S. consumer confidence virtually unchanged in October. Okay, right there. There you go. Inched down by 1 point from an upwardly revised 95.6% in September. 95.6. All that doesn't really mean much. Here's the quote. Consumer confidence moved sideways in October, only declining slightly from its upwardly revised September level, said Stephanie Guichard, senior economist, Global Indicators, the conference board. Changes to the individual subcomponents were also limited and largely cancel each other out. So this thing's always changing. Remember, statistics lie. They really do. So what do we need to take away from this? It's just unchanged. Where are we at historically, though? I mean, it's an elegant analysis. Take a look at this. Is a good look at your consumer confidence index going back to 2020. They even have it outlined right there. That's COVID. Where are you at right now? Still significantly lower than where we were pre-COVID. That's sort of the new era in finance. People are very skeptical. They're very skeptical since the onset of COVID-19 and what happened to the global economy in that situation. Still very skeptical. There's no way to argue that. But historically, where are you at? Well, you're still above 2012 levels when things were really bad. But you're right up in here. You're right up sort of in a recovery period. This was a big-time recovery period, 2015 to 2016 to 2017, before the economy really started to go great guns ahead of COVID. You had really high optimism. People were very, very high on things. This area right here was sort of a recovery period. I would just go ahead and draw a straight line and say, okay, we're at about recovery period area levels. Funny, though, because you're here and your markets are at all-time highs. So what does all of it mean? It means we don't know. It means that we're in a new economic environment. We're not going into a recession. It looks like that's been avoided. I called that for this year. That was incorrect. It doesn't look like you're going to get a recession, at least not this year. That's for sure. Let me see, Team Marina, what time will you be starting this session? The FOMC live session is going to be at 12:20 p.m. my time, so 2:20 p.m. Eastern, 10 minutes ahead of Jay Powell's press conference, which starts at 2:30 p.m. Eastern. Let me see, Lebo, good to see you. Hi, howdy, how you doing? I'm confident you're doing well. In any case, that's right there. Fed Watch, this is what it's all about for tomorrow. You'd see 95.7% chance that you're going to get that rate cut that we're all looking for, right? 25 basis points. Fascinating stuff. But it really is going to be about forward guidance. What's going to happen towards the end of the year? We're pricing in pretty much another rate cut. So the markets are relatively certain about what's to happen here late in 2025. You're seeing back-to-back 25 basis point rate cuts. Where the game will really get interesting is when Jay Powell's sort of on his way out officially, and then we start talking about the future of Fed policy with your next Fed chair. And what do you have here? Maybe not so good. maybe not so good. Maybe you're going to see aggressive rate cuts. Maybe you won't see aggressive rate cuts. Maybe a period where we just sort of stand pat. By March of 2026, where are we at? About 3%. So if we go fast forward way in the future, let's go all the way to next December. Somewhere under 3%. Is that reasonable? Yeah, more than likely. Is inflation under control? Absolutely not. Absolutely not. So you see things like this and you say, okay, dovish policy should be driving commodities higher, and it is certainly in the precious metals markets. But for U.S. oil sort of got a little bit of a bump here. This is an intraday chart. I want to go ahead and pull up sort of our long-term levels here, though, and really illustrate where we're at. We did not quite get a test of our 55.15. That was an area where we had a buy on from about 55.29. The low here was about 55.96. So 56 held up. It was about $4 south of this. Do we think that this is the bottom for WTI crude oil? I don't. Not even close. I think that you're going into the fall, winter months. There's a very good chance that you're going to see a challenge of those 55 lows. And we're still there. We're still waiting. This proximity test right here shows us that there are bidders down here. And I think that's a pretty good scalping zone. However, what I will say is this. That's the big level. This level right here going into the 11th month of the year, that level right around $55 is the big one. If it does not hold, you're going south. You're going south in a big, big way. And I think it's very important to realize how important that zone is. Once that's wiped out, we're probably going much, much lower there. So for right this minute, if you were going to look to trade this thing, how would you do it? I still want to make my mistakes to the short side. And what that means is I would much rather spend my money shorting this market than buying it, at least on a like a weekly time frame. So if I'm sitting here saying, okay, what do I want to do with my money here? I'd say, well, I want to short, right? Well, we already could have shorted right there. Our 13-period moving average is a beautiful thing. It's incredibly accurate. 62.21. What's this week's high? This week's high is 62.17. That's pretty close. Now you've got the big rotation down about $2. That's great. What now? Fed's going to be huge. EIA inventories are going to be huge. That was a great trade up there. 62.40. That zone between 62.20 and 62.40. Definitely be watching that. You definitely want to be watching that. So if you're trading WTI crude, that's fantastic stuff. Let's go ahead and go to a daily. And there it is. Nice big rally. Doji. Actually, that's an inverted hammer. That's more of a doji. And then the break. Today was the big negative break. I would sort of expect us to break even further south to close the week and get back down into the 50s. Still watching that 55.15 level, though. In my opinion, that's probably worth holding out for. Very, very interesting, though, what's going on in the crude oil market. I feel like they just squeezed all the retail shorts out right here on the big announcement on the sanctions on the Russian gasoline companies, the Russian oil companies. They effectively shut down those Russian exports to India, to China. You've got Trump meeting with Xi later this week. There's going to be a lot of talk about energy, a lot of talk about trade wars and tariffs. That's a fascinating type of a dynamic there with crude oil, though. Huge rally, and then it just stops on a dime right at 62%, and now the crash is on. If I'm making trades, I probably want to make them to the short. I'm just not sure about your trade location. Today's low is about 59.76. Still rotating right around 60. I would be waiting probably until after the Fed to take a definitive position for the week, just because we're going to see a lot of volatility in this market as we roll forward. Interesting, though. I mean, this is sort of the area where, that 38% zone, what once was resistance is now support. It didn't really even work as resistance. We blew right through it. But this zone right here potentially is holding up price. I think once 60 is gone, you're going to come off in a big, big way. Gordon Williams, good to see you. Gordon, welcome. All right, guys, so that's a good look at our commodities markets, our U.S. oil, our gold, our silver. Covered really all of them. As far as natural gas goes, we can certainly do that. Natural gas is always a challenge to trade. We talked a lot about, I believe it was the 920 there on natural gas, and this was a daily 920. These are the types of position trades that really make it tough, make position trading tough. There's your 9 crosses over your 20. There's your bullish crossover, a big gold bar. There was the bid, and things were looking pretty good. We got right up to about 3.5, and the sellers have stepped in. Still bullish, but you're sort of right back to break even after holding this position for a week. Very difficult to trade in this fashion unless you do have deep pockets Typically, that's why most of us dodge in and out of the markets, is because it's very expensive just to get in there and stay. And you're also exposed to a tremendous systemic risks. June's high, though, to the top side. That's pretty much the top side target for this play. Still in very good shape to get that big rally. But the Fed's going to be a big deal. Trump's trip to China is going to be a big deal. There's a lot going on here that could shake the gas markets up. Fall seasonality, we should see bids. We saw some bids. We're not seeing a tremendous number of them, though. Out of the last 5 days, you're only posting one green candle, one positive close. That's not good. So for this time of year, it should be the other way around. We should be closing positive almost every day with just a sweep every now and then lower. We're not getting it just yet. We'll get there. Just got to be patient, that's for sure. Let me see. A Blue Mango. Good to see a blue. Hi, Shane. The gold monthly candle looks like it may end up an inverted hammer. If it does, do you see a gold pullback further to the 3,500 levels? It's a good point. It's really a good point. Let's go to the monthly. I have a tremendous amount of respect for certain candle formations. And so let's just get rid of all this stuff. We've already done all that analysis. So that's exactly what you're looking at, Blue. This elongated tail plus the hammer formation. Be an inverted hammer. Typically, that's a reversal signal. Do we think that that's going to be the way this pans out? It could. Could we sell off down to 35? Sure. We're at 39.66. That's quite a ways down there. I think it's improbable, but it's certainly possible. Let's go right to our yearly range. Right there, that's January. January of 2025. You can see pretty much the entire year has been bullish. We really suffered through the summer months, which were just, you can see both of those. Doji, that's an inverted hammer. That's an inverted hammer. Now you got another one setting up. Interesting stuff. The difference between this inverted hammer and these is that these actually traded very close to inside of the previous month's range. So that meant it was a real compressed market. This is an inverted hammer that's setting up off of a trend. That tells us there's a lot of participation. Potentially, I could see that scenario lining up. Let's go ahead and throw a Fibonacci on this year's range and see where exactly we're at. Right there, January 2025's low. Let's go from that low to our all-time highs up there right around 43.85-ish, 37s, 38%. So if you're looking to get to 50%, you got a long way to go. And there's some serious technical issues in the way. Is it possible? Of course it's possible. Anything's possible. Is it probable? Probably not, given the environment, given the rate cut environment and the different things we see geopolitically. However, if you see a Russia-Ukraine peace, if you see a sudden Fed tightening, you could definitely see a pullback in this gold market. There's no question about it. Could we pull back to 3,500 before we make the next leg up to 5,000? Absolutely. There's no rules. That's why we have technicals to sort of determine how we're going to trade if XYZ scenario unfolds. I would say it's possible. I think it's improbable. I really think it's improbable. I think the stand, if you were going to get a deep pullback, the stand's probably going to be at 37.50. That's what I would say, right above 38% of the yearly range. Maybe if we get into 2026 a little bit, maybe. But I'm still really favor the top side of the gold market. I think that's probably the way you want to be here for sure. But you got to have a good trade location. We'll be their buyer. We'll be net buyers at 37. I can tell you that. 37.25. We'll be net buyers from there. No question. Let me see. Shashank, can you please tell something about U.S. oil? Yeah, we just went over that one. As far as U.S. oil goes, tomorrow, EIA crude oil inventories. Be ready, 10:30 a.m. Eastern. That will shake the market up. Also, the Fed, the FOMC announcements tomorrow will shake the market up as well. As far as oil, for me, it's relatively easy. I mean, it's 55.15. That's going to be the bottom of your yearly, something like this. That's going to be the bottom. That's our big level. That's a support zone. Once that level breaks, then we go much, much lower. What do we want to do right now? If you're trading U.S. oil intraday, what could we do? It's brutal. I mean, it's really hard. Why? Well, because take a look at it. Right there, sort of your traditional open. That's where all your volume's coming into play. This is interesting right here. This is right around the London Open last night. Okay. That's a pretty good size crash right there. Then we sort of built back, and then we came in. The volume returns for the U.S. session. We come right down. We're just sort of bouncing off of this level, which is right around 60. So if I was a late day trading, and I'd say, okay, Shane, I want to trade late in the day. I'd say, well, this is pretty easy. Is this a high probability or low probability trade? It's not a high one. This is an intraday stuff, but you can see the compression right here. The bidders have been there. So theoretically, that's a demand zone. If you get an opportunity maybe to bid right down there, probably right around 60 or 59.92, odds are you're going to get a bounce. I'm not sure how big it'll be, maybe 5 to 8 pips. Is that worth it? When you're showing a real tight spread here, 0.01, so okay, about 1 pip. That's not bad. You could probably make that trade for 8 ticks, something like that. Plenty of volume there. You're only going to have volume in this market probably for another 45 minutes, though. So this is a trade where be very careful if it comes across in about 40 minutes. Usually you get a big flurry of crude oil action on that 2:30 p.m. Eastern bar. So from 2 o'clock to 2:30 p.m. Eastern, typically business picks up in the crude oil market as all the day traders settle out and they get ready to go into the overnight. That typically is how it works. If we wanted to trade this thing, say, if I was looking at a futures market, could we do anything with this? Well, let's go ahead and look. Different prices. You'll notice the market structure is a lot different, and that's because we're pricing crude oil on a futures basis. U.S. oil just sort of tracks the front month futures, so it's like a continuation chart. This is contract specific to December. You'll notice all the volume came in because we rolled over to this month. So what would your level be? You'll see it's a lot different. Your level right there is probably 61.95, 62 would be your sell there, which I love if we get it. I mean, of course. Right here, though, weekly chart. So what's our bid here? Bid here is going to be like 59.96 or 59.76, whereas on the other chart, your U.S. oil, your late day bid's probably going to be your 60. I'd stay out of that game for today. I would wait. I would wait for tomorrow. Probably Thursday is going to be a great day to trade crude oil intraday. I could definitely see that happening as well. All right, guys, I'm going to go ahead and sign off here. A couple more things that we need to look at, though. Just a quick reminder, U.S. government shutdown drags into its 28th days, and you're starting to see the pressure. Pressure's really ramping up. They're going to go ahead and vote again, 13th time. It's not supposed to pass. 6 ways the shutdown's about to get worse. Right here, EBT shutdown. Food stamp benefits are at risk. Trump administration says emergency funds can't be used to keep SNAP benefits going. Will halt November SNAP benefits. That's food assistance. That is absolutely huge. That's going to have a massive impact on just basic civil unrest and stability. I would be very surprised if that comes to pass. I expect a deal to be struck here in the next 2 days. I really do. Probably after the Fed speaks, but if it's not done quick, those benefits come off the board November 1st, and that's going to be a major problem. That's going to be a major problem for a lot of folks. So expect civil unrest, and there will be a political price to pay for all that. That's for sure and certain. All right, guys, that's a wrap for today. That's a good look at our commodities markets. Realistically, sort of in a holding pattern with crude oil. I don't see anything out there that really excites me too much. The gold market, though, we do have a new trade ID out on that. That's fantastic. I love that one, and also that Great Britain pound Aussie. I think that's going to be a really strong trade as well. As far as your dollar CAD, if you're trading the dollar CAD, be ready for fireworks tomorrow. Bank of Canada and the United States Federal Reserve are going to get involved. All right, everybody, I'll be back tomorrow with FOMC Live. That'll be 2:20 p.m. Eastern, 10 minutes before the Jay Powell press conference. Check your local listings, and I'll be here. We got a few things to say about Jay, but I'm gonna take it easy on him. I think we're going to see a very tired, frustrated Jerome Powell. A lot of questions, though, are going to be about the government shutdown. Powell's going to avoid most of them, but he is going to address the EBT stuff. I almost guarantee it. And also supply side, they're going to talk about how the government, the logistical challenges could potentially stoke supply side inflation, and that's going to be difficult as well. All right, everybody, have a fantastic trading day. Trade the action well, and we'll talk soon. See ya.